Hi, and thanks for tuning in for Inventory Control, The Fundamentals, 32Soft's first ever on-demand webinar. And now, without further ado, here is QAD and MRP guru, Don Lindsey.
Well, welcome. And so today we're going to talk about inventory. Just some of the basics of inventory. We'll understand the objectives and why do we have inventory. We'll talk about some database considerations, talk about entities, status codes, and locations, how we set up inventory control, and then we'll spend the bulk of our time on inventory transactions. We'll talk about the perpetual record, receipts, issues, transfers, history, maintenance, some other things. So we'll dive right into inventory. As we remember, every time we have a webinar, I remind you that there's probably lots of terms and words that I might use that you may not understand. If you don't understand it, Google, go to the QAD website, send Denise and I an email, however you want, so we can clarify exactly what we mean, because with all companies, everybody has their own terminology for inventory, work orders, shop orders, those kinds of things. And so we want to make sure that we understand exactly how our company does that. And I've mentioned before this great little article that Bill Linder published. I love my QAD wiki, so good idea to have good solid work instructions and a company dictionary or a wiki. So what is inventory? Well, inventory is stock, material, inventory. It's used lots of different terms, but it's basically stuff we have around to allow us to do production, to satisfy customer service with finished goods and spare parts, and support activities such as MRO, maintenance, repair, operations, those kinds of things. We can pretty well classify inventory, and there's a lot of fields within QAD, the item type, the category codes, the user definable fields. There's lots of ways in QAD to help us classify or tell us what kind of inventory we're dealing with. Typically raw material, work in process, finished goods. We'll talk about transit inventory, the maintenance and repair. I see a lot of organizations using the EAM module now to assist with that maintenance, repair, operations type of thing. Word of caution about work in process for those of us in inventory control. I'll talk about this a little bit more, but we consider work in process as WIP, work orders, 16.1, 16.10, 16.11. Accountants, which we always have to take into consideration, consider work in process as value added. So even if it's on hand, they may consider WIP. The flow of inventory through the organization, we covered this a little bit in terms of the accounting webinar that we had earlier in the year. And it's basically looking at inventory as a flow of materials through the organization, because that flow of materials is actually the flow of money through the organization. And it starts off with our suppliers. We buy raw materials, components. Those are purchased so that we can convert those into work in process. We buy MRO items, and that then debits accounts payable, because we've got to pay the suppliers, and credits inventory, because remember from our accounting discussions, double entry bookkeeping, you always have to have a debit and a credit to any activity that you have in operations. So we continue and take our raw materials and components, we cut manufacturing work orders, we build those work orders, put them in inventory, and then finally we build those or we credit the inventory on hand and debit our work in process. That then comes down and we finish the product. These are the end items that we ship to our customers. We talked about forecasting extensively in a couple of webinars this year. And here we're going to credit the work in process and debit finished goods. Then if we've got a distribution system or a DRP system, we're going to move that material into the warehouse, and then finally that finished goods gets shipped off to the customer, and at that point we credit the finished goods account and debit accounts receivable. So this whole flow of inventory through the system allows us to keep track of the money that we're having in the inventory side of QED. We can think of inventory in three basic ways, either through the classification of stock, as kind of like we talked about raw materials, finished goods, etc. The functions that inventory performs, we'll look at some of the functions, and then obviously cost. The objectives of inventory are basically three. First of all, to maximize customer service. We carry inventory. The marketing salespeople would prefer that we just have a lot of stuff around so that if a customer orders, they can have it immediately. The other objective is to minimize the inventory investment, because the finance people would prefer that we have no inventory, that we just order it and ship it as soon as the customer has it. We don't have to worry about carrying costs and all the costs associated with having inventory on hand. Then we've got the production guys out on the shop floor, and they are kind of like the customer service people. They would prefer us to have lots of inventory. They can work on anything they want. They can have their labor people go ahead and work without interruption. So they would like to have a lot of inventory around. So you've got these three basic conflicting objectives of inventory. And it's our responsibility. Inventory control is the balancing act of optimizing these three objectives. I remember when I was a production inventory control supervisor at Beckman Instruments many years ago, I had this really bright young guy who was just getting into production inventory control, and he literally could not take the stress, because most of us who work in inventory control understand that by balancing these three objectives, we've got to have these plays that cause us to have stress in the organization, and he had to quit. He couldn't even handle balancing these three objectives. So it's a it's a tool and a process that we have to undertake. There's lots of people who use inventory. Obviously, just the production inventory, the receiving people, inventory staff, they receive parts, they issue, they do cycle counts, all that kind of stuff. But there are a whole lot of other people in the organization: senior management, R&D, engineering, customer service, accounting, finance, planning. They are all interested in inventory control because everyone wants to know and needs visibility of inventory management. So we who sit in the inventory control seat in an organization are in control of the cockpit. That's where everybody wants to have information. There's basically two ways to look at inventory. There's the aggregate management. Now this is for supply chain managers, material managers. They need to look at inventory, managing raw material, work in process, finished goods at a dollar level, because money, as we've talked about, is the language of business, and we want to be able to translate our inventory, the flow, supply patterns, functions, objectives, costs associated with inventory, into language where we can tell the rest of the organization, especially finance and senior management, what kinds of inventory we have, what the flow is, what our projected sales are going to be. That is the responsibility of senior management. We talked about this concept of nomothetic and idiomatic. Nomothetic being normal, average, conceptual. So we have to be able to establish these overall dollar levels of inventory desired and implemented to control the achievement or the goals of the business plans. From the aggregate level, inventory control also has to be controlled at the individual part number, because remember, we have these nomethetic concepts and average values and total values and sum values, but you don't control inventory at the aggregate level. You control inventory at the idiomatic level, at the part number level. So we have to establish decision rules about the importance of inventory items, how they're to be controlled. We'll talk a lot about that today in terms of transactions, how much to order, EOQ, when to order, MRP and forecasting. So this is all controlled at the individual part number. So we manage at both the aggregate or nomethetic level and at the idiomatic level. Inventory supplies us with some functions. Anticipation inventory is anticipation or inventory that we carry for seasonal demand, for promotions that are going to be offered, strikes. There's the function of deviation or variations, the fluctuations in supply and demand, and we normally call or have inventory on hand in terms of safety stock, and we've talked about safety stock, the formula of desired service level times the mean absolute deviation of demand adjusted for the difference between the forecast interval and lead time interval. So we carry lot size inventory. We talked about EOQ, twice the annual demand divided by, or the square root of twice the annual divided by the carrying cost and times the unit cost. There's transportation. So if you're in a distribution environment and you've got warehouses across the country, you have to take into account this distribution. And then finally, inventory serves as a hedge against activities that may or may not happen. I can think of the fuel industry. I can think of printed circuit boards. I used to work for a printed circuit board house that had to gold plate the ends of the PC boards, and we had a couple of guys that did nothing but just figure out what the price of gold was going to do and whether we should buy more or wait until the price went down. So inventory serves these functions, and again, in Q80 you have many options in terms of the fields to be able to classify that. So how do we set up inventory? Well, this flow kind of gives us a indication of the individual activities, and we'll walk through each one of those. First of all, you have to set up an entity. And an entity is primarily an accounting problem. It generates a separate balance sheet and income statement. It's activity or a business element that plans and budgets and is assessed taxes. And we create that in 36.1.1.2 entity create. So you have to have the entity code, a description. Obviously in EE you have to create the relationship in the business relationship. There's a location code that's not currently used in active, and then what domain that entity is existed in. And as you can see, these fields down here are primarily financial questions or information, but you have to have the entity in order to drive down to the lower level at the location, which we'll talk about in just a second. Entities have shared sets. You can have alternate GL numbering processes, so you can define a GL numbering source from a current entity or another entity. And then you have taxes. So you can enable gross tax accounting, and we won't get into taxes, as that's a whole nother 4 or 5 webinars. So once you've created the entities, then you need to create status codes. And we talked about item status codes, how you control the pre-production, production released in terms of items. But in terms of inventory status, you can create inventory status codes in 1.1.1 that define the state of the item as it exists in a location. That has primarily to do with whether this location inventory is available so that you can allocate it to sales orders and manufacturing orders, whether it's nettable for MRP, or whether you can overissue. And that has primarily to do with advanced repetitive. This is a very flexible tool and is critical for the effective control of inventory. Along with the inventory status codes of available overissue, you have restricted transactions that you can define for specific location codes. So when you're processing transactions, the system checks to make sure that you can process particular transactions if a particular item is in a location. So you enter the location code, and that then becomes associated with that inventory status code, and that defines on how you're going to be able to process that inventory. You need to take serious consideration of how these are set up. I've seen companies with 25 or 30 inventory status codes. I've seen companies with 2 or 3 status codes. So it all depends on how you want to. Very flexible process, so you can define that for your organization. Some transactions are required by the system, and no matter if you restrict them or not, you're still going to be able to process. This is just a list of inventory status codes, and it's so important that all your warehouse and supply personnel understand what these settings are and how they work. Remember, it's always easier to do things right than to go back and try to correct it. So once we've got entities and status codes, now we can talk about sites. And the physical layout of the facility should be as closely as possible related and represented inside your inventory control system. And you do that through the establishment of sites and location. Sites are basically where you do inventory control. It's where you do forecasts and production schedules, production and costs, material and capacity plans, and you report at a site level. There are some in EE that require the site code to be equal to the company code if you take that into consideration, but you can set up however many sites you want. You can have 2 sites in the same building, 1 site in another city. It all depends on how your particular facility is built. So the site maintenance, you define the entity and site that or the domain and entity is going to be associated with. If you use Interstat, it's an accounting issue. We'll talk about that later in the year. There's your default inventory status. Do you want automatic locations? I say there's a word of caution there. Be cautious with automatic locations. Inspection locations, EMT, enterprise material transfer process. It is able to set allocations in EMT. There's a transfer variance account. I'll talk about that when we talk about the control files. Then transfer ownership having to do with consignment, logistics accounting, and if you use the PSW master schedule workbench and production schedule workbenches. There's also the option to set the site maintenance for multiple domains. And now we set up the locations. Locations are based on some schema, and that probably is one of the most important things you need to define is that location schema. It's going to have effect on your inventory, on your transactions, on your pick lists, on everything. So pay a lot of attention to those location schemas. There's the inventory status for this particular. You can associate it with a project. Here's permanent. I'll talk about that when we talk about zero balance. The location type must equal the item master type. because otherwise, if you set the item master, you can only put that particular item in a location that has that same location type. You can designate single items, single lots. You can define category. There's reserve locations. Is this one that you can transfer ownership and consignment? And then you have a physical address, which allows you to create shipping documents off your locations. Location schemas can be good. Depends on how you do them. They can be bad. I've seen lots of organizations that fall back on spreadsheets because they haven't done a good job of defining their locations to most accurately represent their physical storeroom and warehouse activities inside of QED. Locations are critical to the successful and effective control of inventory. Little statement, be careful of automatic locations. Don't use automatic locations unless you totally understand the functionality behind that, because it can get you pretty screwed up. There's reserved locations, which allow you to define locations that are assigned to specific customers so that you can control how they're allocated, picked, and issued. There's compliance, and we won't talk about compliance just yet. The inventory control file, okay, this is critical. As with most activities, you've got a control file that sets how you do things. So you can set the method of tolerance, the days of issue, the min-max tolerances for ABC analysis, and then in terms of accounting, you can tell it how to handle current cost, whether you want to summarize journal entries, whether you want to roll up cost into lower levels, how you're going to affect current cost, the journalized methods, whether you're going to create GL transactions, the transfer clearinghouse or clearing account. This is if you have a transfer between sites and you have different standard costs in those sites. This is the variance account that's going to take that. There's intercompany, whether you use mirror accounting or not, and is this a default site for your whole inventory control system. That inventory control 34 or 3.24 also has picking logic in it. Picking logic says how you're going to allocate parts at the detail level when you're going to release picked lists and sales orders. You can either do it by warehouse location. If you've got meaningful lot numbers, you can use those. You can do LIFO or FIFO. This is very common in the life science areas, or you can use expiration date. There's lots of ways that you can do that. Once you pick that, be cautious. Changing that is probably problematic. In EE, they, for some reason, have separated the operational and accounting control functions into this 36.9 series of accounting, but it basically has the same values that you've got. I won't spend a lot of time on inventory control. It's basically items, item inventory data, inventory product lines. The one thing I would emphasize again is the uniqueness identification concept in terms of part numbers. Remember, one part number, not one part, many part numbers or many part numbers for one part. That can really screw up your inventory control and the completeness of setup. As you look at 1.1 or 1.4.1, 3, 5, 7, don't have empty fields in those menus. You need every one of those fields to effectively control inventory. Master comments, easy way to help with inventory control. These are predefined comments, and you can attach those to many transactions, make inventory control much easier, add to effective administration. And then the last portion of inventory control setup is cycle counting and physical inventory control. So let's look at the inventory control transactions. So the flow of inventory, remember we said the flow of inventory is the flow of money through your organization. So you want to make sure that these transactions are going to allow you to understand and look at that flow. The perpetual record, this is a concept that is on your APEX certification exams, and it is defined as the continuously updated quantity on hand and the transactions that got it there. So let's take, for example, we've got, we're going to allocate, we're going to place an order, we're going to issue, and we're going to receive some orders. So the perpetual record starts off with the 500 that we've got on hand, and out across the dates in the horizon, we've got the 500, because that means we've got 500 available. We're going to allocate in period 2 400. So now we've still got 500 on hand, but now our available is down to 100. We're going to order in period 3 500. The on hand still is 500. The availability is still 500, and now we're going to issue 400 from inventory. So our on hand goes down to 100. Our allocations now go back to 0, and our available is 100. And so now we're going to receive the 500 we ordered. Our inventory goes back up to 600, and now our available is 600. So the perpetual record is this continuously updated quantity on hand and all of the transactions that got it there and the history. So for all activities in QAD, MRP, cost, inventory, this perpetual record needs to be at 98%, probably close to 100. Does anybody remember the old Cardex systems where you physically wrote that in? I remember a machine shop that I worked at when I was a young guy, and we had a whole card deck that we would go and we would record in. Well, this was the first original perpetual record, and I'm sure that there's lots of companies out there that are still using Cardex systems. So let's look at inventory control processing. So remember the general ledger consequences. We talked about our accounting webinar. In terms of Pacoli and his double entry bookkeeping system, every transaction has a debit and a credit to the general ledger. So the transactions we do in inventory control affect how that general ledger, and that's where the flow of the money is recorded. Here's just a quick reference of all the transactions that exist in QAD. Lots of different transactions. And it is important that everybody in the supply chain, receivers, shippers, everybody, understand each one of these transactions in detail, how they work. Because again, trying to correct is much more difficult, 1,000 times more difficult than doing it correctly the first time. So let's talk about receipts in QAD. Receipts are basically the way that inventory gets put into the on hand. There's 3.10. This is sales orders return process. You can, if it's not related, a lot of companies don't use sales orders and invoices, so they just use it for inventory. So you only use this if you do not have sales and orders and sales order and invoice module. If you don't use it, you can see in the transaction history, you're going to see an RCT.SOR, and there's the accounting implications. 3.11 is a return to stock, and this you can use to do just return of floor stock items back to production, materials that are sent back from engineering, et cetera, et cetera. This you can see in transaction history as an RTC-RS, and there's the accounting implications. Purchasing. Purchase order receipts, this is how you're going to get 99% of your product, or hopefully 99% of your product into on hand. So 513.1 records the activity of a supplier fulfilling a commitment based on a purchase order. The work order receipt, this is how we get product in from open manufacturing work orders. You can basically see 4 different transaction types that can occur from a work order receipt: RCT-WO, an RJCT for rejected materials. And then if you're going to issue material from another site into a work order, you'll see a ISS-TR and RCT-TR, which we'll talk a little bit more about when we talk about transfers. Caution about this little closed box. Depending on how you do that, remember that if you hit that closed box, that means that that work order is susceptible to 16.21 work order accounting close, where it's going to take all of the dollars out of work in process and put it into the general ledger based on your product line of that particular item. So just be cautious on how you do that. I ran into a company just the other day that had this configured screen, yes, and it caused some issues for them. So just be cautious with that. GL is affected based on how you do the transaction. There's the 1612 work order receipt backflush. This can generate up to 5 different types of transactions. And this is a fairly complex transaction. It's got a whole bunch of fields or frames behind it. So you should make sure that people who use this understand how it's going to be processed. If you're using advanced repetitive, the 1822.13 is your backflush transaction in advanced repetitive. And again, this is also a very complex transaction, can record ISS-WOs and receipts of items into inventory. The 1822.19 is primarily used at the operational level within advanced repetitive, and there it's going to create a transaction in the OPHIS, OP-HIS table to record the movement, and if it's the last operation on the advanced repetitive, it can create a RCT-WO transaction, which will put the part into inventory. 3.9 unplanned receipts. This is the ability to put in inventory into a designated area wherever you want. These are key fields for the unplanned receipt because this RCT-UNP needs to know what general ledger accounts are going to be used. So normally the cost accountant is going to define what fields can be used for that, and accountants really don't like this transaction. I don't think even materials managers don't like this transaction. I can usually go into a company and look at the 3.9 transactions and the 3.7 transactions, and if there's an excess of them, you can just about tell that their inventory control system is out of whack. There's 3.12. This is a backward exploded receipt. This also is a fairly complex transaction, but this will get parts. Several transactions can be created from your RCT-WO receipt into inventory, or issues from inventory into the work order. So you can just do that receipt without doing the 1610 work order component issue. There's the accounting transactions, and now we come to issue transactions. And issue transactions are the way that QAD takes inventory away from on hand and issues it to wherever. Sales order shipments, 7915. If you use advanced repetitive, this shows that you are shipping parts against a commitment to a customer based on a sales order, and this is going to mark the parts ready for invoice. You can see this as an ISS-SO transaction in transaction history, and the various accounting debits and credits that are going to take place. 1610, I mentioned that just a second ago, work order component issue. If you've got a work order, this is a way that you can issue parts to the manufacturing work order. You could also use the 3.12, the backward exploded, but this allows you to issue parts directly into, and we'll see these as ISS-WO transactions in the transaction history. Purchase order returns. This returns a part to a supplier from on hand. I say caution using this transaction because the part has to be exactly in the location that you think it's going to be. So if you use lot and serial control, this can add to the complexity, and it will create an ISS-PRV transaction. Issue unplanned, just like receipts unplanned, this is issues unplanned. This takes parts out of inventory. Again, key fields are the debit and credit account, and you should use this account with much caution. You'll see an ISS-UMP. I don't like to see a lot of those in the transaction history. As I mentioned, it indicates things are kind of out of control, and accountants hate these as much as they hate 3 9s. You don't want a whole lot of 3 7s and 3 9s in your inventory control system. There's a transaction in EE called 3.14, scrap transactions, so that you can actually record reasons for scrap. You can go into 36.217, define reason codes with the reason type equals scrap, and you can get a pretty good feel for why particular items are being scrapped. There are transfers in inventory. Transfers move or take material from an inventory location and move it to another inventory location in QAD. There's the 3.4.1, takes it from to a specific location or a different site or location even. I make mention of use the caution of the to status warning. If you just hit yes on that, sometimes you can get really screwed up. You really have to take into account where you're moving from a location to a location, because this location may not have the same status code of the to location, especially if it's going to be rejected or MRB or something of that nature. So caution with that little pop-up box that comes there. This is going to create 2 transactions, where it came from and where it's received to. There's the accounting process. You can do that also for multiple items. If you're brave and understand what you're doing, you can do that. This also creates the ISS and RCT transactions. And then there is the transfer with lot serial control. Be real careful with this, because you can transfer from one site to another. You can change the lot serial number on the transfer quantity, or you can change the lot serial number but not change the location. So be cautious with 3.4.3. You should probably have menu security on that for only individuals who really understand what they're doing. History. Remember the definition of the perpetual record: the continuously updated quantity on hand and the transactions that got it there. So inventory history is very important. 3.2.1, this is probably the most used browse and report in QED. I see this constantly used 1,000 times a day. So 3.21.2, your transaction by item browse, very important. The key here is the transaction number. You want to make sure you capture that transaction number, because that is going to give you the visibility for more detail. You can also run 3.21.14 as a report. Don't see a lot of people using this, because they usually like to use the transaction browse and export that to Excel and do those kinds of things. But the report is sometimes very handy also. Once you have the transaction number, you can enter that transaction number in 3.21.1, and this gives you a lot more detailed information as to who did it, what kind of transaction, the item descriptions, unit of measure, price, etc. I'll show a lot of people use this for identifying the user that did that, because if you've got screwed up inventory, the system didn't do it, people did it. So you want to go back and do some additional training, understand what this particular user is up to. The cost information that you can get from 3.21 is also very valuable, divided into material, overhead, total. If you want to look at even more detailed information, if you take the GL reference code that's on the 3.21, you can drive into either the SE value of that through 251319 to get some more information about debit and credit accounts, or if you're in EE, you can take that general ledger and into 2515 2.1, you can go in the GL transaction view and see more detailed information about the cost. Maintenance of inventory is sometimes required in QAD. You need to change, delete, add, modify, etc., lots, serial numbers, locations, etc. And you do this through the maintenance functions in inventory control. First is 3.1.1 inventory maintenance. This is used to review and modify attributes held in particular sites and locations. And you can see a complete transaction history of that by looking at the ISS-CHL and RCT-CSL. This is the before and after picture of what that particular lot site was changed to. You can do it by lot item in 3.1.2. And finally, we've got the 3.23 zero balance and delete. I mentioned that you should have caution when you use the permanent location field in 1.18. This allows the system to track and store information about all items that go through a particular inventory location. Users typically don't like this because it gives you zero quantity on hand in the detailed information on inventory. So what you need to do then is to run the 3.23.0 balance, delete, and archive, and this will basically get rid of all of those. It does cause some issues with how allocations are handled, but you can clean up those zero balances by using the 3.23. So there's lots of tools that Alex and the team have available for inventory management. We've got location maintenance, receipts, consignment, work order receipts, all sorts of data loaders that can assist you in helping with the massive amount of detail that needs to be fed into your ERP system. If you are interested to learn any more about these, please contact Denise or Alex at 32Soft, and we can give you a free demo of how that works. So today we've talked about data structures, inventory setup, status codes. We've talked about a number of different kinds of transactions that occur in QAD. If there are any questions, Denise, back to you.
I do hope you enjoyed the convenience of our first ever on-demand webinar session. And again, thank you for tuning in and for your interest in our monthly webinars.